fantastiskt att se så många här trots att det är så vackert väder ute. Det är jätteroligt att ni har kommit hit igen för att lyssna på en presentation idag av två väldigt spännande bolag inom Lundingruppen, BlackPearl och Chamaran. Vi tänkte börja med BlackPearl, så att ungefär en halvtimmes presentation och sen finns det möjlighet att ställa frågor. Och efter det så tar Pradeep från Chamaran vid, och efter den presentationen också möjlighet att ställa frågor också. Det finns många frågor och när vi är klara så kommer det finnas förfriskningar och lite grann att äta här utanför. Så med det återigen stort tack för att ni kommer till de här träffarna om och om igen. Jättekul att se er allihopa. Och with that I would like to leave over to John Festival, who's the CEO of BlackPearl. John.
Does it work? Okay. Thank you. Good evening. Thank you all for coming. I'm the president of BlackPearlResources, and I've been reminded that I've been remiss in not coming to Sweden often enough to visit with you, and I've been encouraged to come more. So I've committed to come more to explain what the company is all about and our progress. So again, thank you for all coming tonight. These are our it says that everything I say can be used against me, and but we're very excited about what we have in the company, and we will talk about the future and what we're going to do. BlackPearl is a heavy oil company, oil sands company. That's what the management team does best. We have worked in oil sands for a long time, and we developed a strategy 5 years ago for this company for three main properties, for Onion Lake, Mooney, and Blackrod. The strategy that we developed is working. What we said we're going to do is happening. We've grown the company from 5,000 barrels a day to 10,000 barrels a day. It hasn't grown in the last year or so, or the last couple of years, and it may not grow next year. But that's because we spent a lot of money preparing for our next phase of growth, to go from 10,000 to 16,000 barrels a day. So we'll talk more about where that growth is going to come from, but we have set the stage for some significant value development and some significant growth in the company. The shareholders of the company consist of management at 10%, the Lundin family and Lucas Lundin at about 15%, and Lucas is here tonight. He may want to answer some of your questions afterwards also. We have another shareholder out of Toronto at Burgundy. They have 15%. And we have one other large shareholder that has about 10%. So if you add that all up, that's four shareholders at about 50%. So those are long-term, value-oriented shareholders that believe in our business plan, believe in the management. So we are shareholders just like yourself, and we're doing everything we can to add value to the company. And I'm sure I'll get some questions tonight, but as to why the share price has gone down, why it's gone up. It's difficult for me to answer those questions because sometimes I don't know. I don't know why the market reacts the way it does. But we are lumped in with other oil and gas companies in Canada, and we are lumped in with other oil sands companies. And sometimes the market is in favor of these companies, and sometimes it's not. So the stock price maybe was too high 3 years ago, and it certainly, I think, is too low right now. It does not reflect the true value in the company. The most important point on this page is we're at 10,000 barrels a day with the potential to go to 100,000 barrels a day, and that's significant. And we are financed right now to go from 10,000 to 20,000 barrels a day. And that's what the recent equity financing has done for us. These are the three properties, all in oil sands or heavy oil areas. We have production coming from all three of them. We're using conventional technology that we've employed before, that we've worked with. So we have production coming from all three properties. We have reserves booked on all three properties, and we're quite familiar with the technology used to exploit these resources. Many oil and gas companies are exploration companies, like Chamaron, like Lundin Petroleum, and they're going looking for new pools, new resource, to try to find something new. We have all these pools, they're well defined, we understand what we have. Our job is to get the recovery from under 10% to well over 50%. So we're an exploitation company. And it's very engineering intensive, very technology intensive. And so it's different. We're not taking on risk trying to find new properties. We have them. We have the risk of exploiting them, and it's a slow process to get regulatory approval, to pilot, but we've seen a lot of success in that process. And now this is our strategy, and it was a strategy that we put together 5 years ago. It was develop Onion Lake primary, because those are easy wells to drill. They cost $500,000, they pay out very quickly. Use that cash to develop Mooney. And so we've done that. We've piloted Mooney. We've done phase 1 at Mooney. That's working. That's helped us grow to 10,000 barrels a day. Now we're going to use Onion Lake primary and Mooney to help develop thermal at Onion Lake. And once we've developed Onion Lake, 2 phases of thermal, we're going to use that cash and that size of the company to develop Blackrod. Now that's going to take 5 years to develop both phases of Onion Lake. So in the meantime, to accelerate that, we're going to look for a joint venture partner for Blackrod. So that'll help accelerate that project. So we won't have to wait 5 years. But we won't take any deal. So people ask us, are you talking to people right now? When are you going to do a deal? Yes, we are talking to potential joint venture partners, but we may not do a deal this year, we may not do a deal next year, because it may not be good value for our shareholders. So if we can't do the right deal at Blackrod, we'll wait until we have an appropriate deal. But again, the project's getting better and better, because this year we should have approval. Our pilot continues to work very well, so we're adding value to that project as we wait. I'm going to talk about our operations now, but before I do that, I want to talk about our philosophy, how we built this company and how we built other companies in the past. And it's this process of identify, validate, and commercialize. And that's very important because these are our skills. This is what we're good at. We have one of the best explorationists in the business. He has found many heavy oil pools. He's identified very good rock that is amenable to oil and gas, heavy oil production. So he's excellent at identifying which rock works and which doesn't. And he's done this many times in the past. But even though he's very good at his job, it's not 100% certain that it'll work. And that's why we've piloted all of our projects. And that's why it's important to do that. This validation phase we've done with all of our projects. We've run pilots, we've looked at analogs, we've done a lot of testing. Because once we have this certainty, once we remove that risk, commercializing the project is just a matter of putting people and money and machines together to make the project work. And so we've commercialized Mooney. We are commercializing right now the first phase of Onion Lake. And so, but we've done all that validation beforehand. And there's a lot of companies that have failed in Canada because they didn't do this properly. Companies such as Southern Pacific and Sunshine, Conacher, Bronco, North Peace, there's probably 10 others that have not done this process very well, or they've taken on too much debt when they went to commercialize. So we're being very careful with our shareholders' equity and not proceeding too quickly and not making mistakes. This is very important that we get it right. And some people are impatient with that process. They think it's too slow. But in the end, not making mistakes through this process is very important. I'm going to talk about each of our properties. I think many of you that follow Black Pearl understand our properties, but what I'll try to do is give you some insight, more than just what's on the presentation. We've drilled over 300 wells here at Onion Lake, and they've been they've helped us grow the company. Onion Lake Primary peaked at 7,000 barrels a day. We drilled over 300 wells there. These wells, on average, cost about $500,000 per well, $500,000 to $550,000, depending on what area they're in. And the average return has been about $1.35 million. So we get approximately 2 to 3 times our money back, which is a pretty good return. These wells don't last very long. They peak in 6 months. They have a flat peak life for about 2 years, and then they decline quickly. So overall, they produce for about 5 or 6 years. And so this property on primary is declining. So we only have about 125, 150 wells left to drill, and it is declining. We'll drill 20 or 30 wells per year. But what's exciting about this property is this thermal area. And so we're going to go into this area where we've only recovered, in that area alone, we recovered less than 2% of the oil in place. We want to take that recovery up to 60%. So that's in an area where it's very thick. And we're going to put steam in that area and recover more oil from that. And the reason we have to go to thick areas is because it's more thermally efficient. We don't lose a lot of heat to the rock above and the rock below, so we want to put in the very thick rock and make sure that steam loosens up or warms up all the oil within that area. So that's our thermal area. You can see that Onion Lake compared to 6 other projects in Saskatchewan. And these 6 projects most of them are being operated by Husky right now. And Husky is a company that operates in heavy oil and oil sands in Canada. They have a little over 300,000 barrels a day. And the best projects within Husky right now are the 35,000 barrels a day they get from these thermal projects. They're the most capital efficient. There's some excellent projects. We studied a few of these projects before we did our own. We visited their site. We're using the same manufacturer that Husky used. We're using the same design to build our project. That's being built right now. It's being fabricated in shops right now. The first modules should be delivered to the field in 2 to 3 months. And we'll be building and installing those modules up in the field. This is an excellent project, very good economics. And the reason it works very well with steam is because the oil already moves. We can produce a well there at 100 barrels a day. Adding steam should just invigorate that process. So we're very excited about this, about Onion Lake, and all the analogs, all the other successful analogs nearby. We also did pilot this about 5 years ago, and we put steam in the ground and got a good response. So we're confident that it should work. These are a couple of the analogs that we studied. The one on your right is one that's been operating for 25 years now, and it's been very successful. It's recovered 70% of the oil in place, more than 25 million barrels. And the one on your left is a recent project that Husky operated. Very good response, and a very low steam-oil ratio, very efficient. So Husky's very pleased with this. And so we're studying these projects to help us when we build our projects. We won't make any mistakes. This is what the project will look like. This is what phase 1 will look like and where our plant facility will be. And these are the horizontal wells that we'll be drilling. And so we have, with all these wells that we have, both phases 1 and 2, totaling 12,000 barrels a day, will have about a 25-year life. And beyond that, you can see that there's wells here and above over here. Beyond that, even though it's thinner pay, once we have these facilities in place, we can start putting steam into other areas. But this area alone is going to be 25-year life at 12,000 barrels a day. The next project I'm going to talk about is Mooney. And again, any technical questions or any general questions you have about any of these projects, you can ask those questions at the end of the presentation or afterwards when we have a sandwich. So this is our Mooney project. We piloted this project in this time frame right here, in January starting in January 2009. And the pilot worked very well. It encouraged us to do our phase 1 at Mooney. And the phase phase one has been increasing every quarter for the last 3 years, so it continues to increase in production. So it's done very well. We've had some operational upsets because we're running in a remote place in the bush, and sometimes we have weather problems, sometimes we have equipment problems, but generally it's been increasing for the last 3 years. And it should increase for, we think, or stay flat at this level for the next couple of years. And you can also see the green line is our phase 2 wells. They've done very well also. So we're encouraged that the whole place should work. So this is about 2 miles by 10 miles. It's a big pool. You can see phase 1, where we have a little more than 2,000 barrels a day. We've drilled up phase 2, and we'll be implementing a polymer flood there late this year, early next year. This is the area that caused us to reduce our guidance for this year. We weren't able to build some of the roads and pipelines that for the polymer flood out to some of the remote parts of the field. And it's a very wet area. It's similar to some remote areas that you have in northern Sweden. It's a long winter, and then when spring comes, it's wet and it's very boggy. You can't get into those areas. And so we had delays. So these delays caused us to have to push up our production into the first quarter of next year. So instead of producing 10,000 barrels a day this year, we're going to produce between 9,000 and 9,500 barrels a day. So that production is not lost. It just got delayed by 4 or 5 months. So this project is commercialized, is well underway, it's working. After we're going to drill wells into the phase 3 area, and so by the 2016 we should have polymer flood going to all 3 phases. We also have future potential up to the west, but just these 3 phases alone should be 6,000 to 8,000 barrels a day. Very stable production. It'll be a very shallow decline because we're putting more chemical into the ground to repressurize and to push the heavy oil towards the producers. And the last project I'm going to talk about is BlackPearl. Now this is the one that gets Lucas most excited because he's familiar with seeing big projects around the world, big exciting projects that have a lot of potential. We think this is an 80,000 barrel a day project. It has the reserves to back it up. These are 20 square miles. This is a big field. And these kinds of opportunities attract companies like Statoil and Total and Exxon because this has the potential for 100,000 barrels a day. This land here that we bought recently has more potential, and this part right here, this is owned by some other operators, but they may not have enough to develop their own project. And once we have the infrastructure and we dominate in this area, we'll probably be able to buy them out also. So there's a tremendous amount of potential in this whole area, and we'll be the dominant player here. So we'll be, have a commanding position to develop the whole area. It's a significant potential. We've been working on this project now for 5 years, and we've drilled lots of wells. We've cored about 30 wells. And what coring means is that you drill a well, but you actually recover the rock. So you drill a well and you don't just break it up with a drill bit. You actually recover the rock, and you bring it to surface, and you study it, and you look at it, and you get familiar with it. And that's helped us understand what this resource looks like. So we've been working with it for 5 years. We have a lot of information. And we thought from the very beginning that this should work using SAGD, using steam-assisted gravity drainage. But that wasn't good enough. We said, SAGD is not it's more of an engineering problem. So there is a technique of how to produce wells with SAGD, but you have to understand a lot of the technical details that are involved. So what we did was we drilled a well about 700 meters long, a horizontal well pair, and we produced it for the first 12 months. Our objective was to prove that SAGD does work in this reservoir, that the process does work. So we did that. It went from 0 to 400 barrels a day. Steam oil ratio dropped to 3. Those are economic results. So we proved that it works. But we also realized that it was not optimal. We didn't think we had the right steaming strategy. We weren't steaming it properly. We didn't put enough steam in at the beginning. We also realized we didn't have the right pump. It couldn't handle the high temperature. We also had, we think, the wrong kind of completion. So what we did was we experimented through this period right here. We tried a number of things, experimenting, trying to learn, so that we did solve all these issues right here, and so we got it into a more stable production. So it's producing about 200 barrels a day right now. It is working. We solved, we think, a lot of those problems. We took those learnings and built a second well pair. Longer, deeper in the reservoir, with a different pump that can handle a high temperature steam at 250 degrees Celsius, with a different completion. We tried a different completion down hole. These are just subtle changes, but these subtle changes are very important because this is an engineering solution that's needed for this kind of reservoir. So the second well pair, I think in a recent press release, has been operating for, at the time was operating for 45 days on production and producing at about 150 barrels a day. So it's well on its way to replicating what this well had done, and probably going to be better than that. So we're very excited about that. This year we'll have more results from that well, and it's public information. So we're going to start sending that information out or putting it on our website so that people can understand what the well is doing month by month. So in another 8 to 12 months, we should have a good idea of how well that well is performing. This is what the ultimate development will look like, and this is where our phase 1, 20,000 barrels a day will be located, and we have 3 further phases beyond that. So when we talk about the potential of Blackrod being 80,000 barrels a day, that's 80,000 barrels a day for 25 years. So it's a significant project, and that's why, again, companies like Total and Exxon are very excited about these kinds of projects because they last such a long time. Companies like Shell and Exxon have been around 100 years, and they plan 20 years into the future. And that's how they've been such large, successful companies, because they have to plan these big, large projects well into the future. So it's difficult for a small company like ourselves to tackle these projects and to finance them. But we've slowly, over time, just like in our previous company, we built the company up over 7 years from 0 to 15,000 barrels a day, and we're able to tackle bigger and bigger projects. And so one day we'll be able to tackle this project if we don't find a joint venture partner in the near term. I think I've already talked about how we're conservative financially. We don't want to make mistakes. Just like technically, we go through this process of testing, of validating, of piloting, so that when we're ready to commercialize and spend money, we're not going to make a mistake. And part of this conservative nature is how we handle our finances. We've never taken on any debt so far in the company. But to get to the next stage of development, we're going to take on some debt. We have a bank line that's been increased to $150 million, and we have an equity financing that we just recently did to raise about $90 million. We're going to use that to finance our first phase of Onion Lake. And our first phase is completely financed. So it's important when you embark upon a project, you have all the money in place. So we're never going to let our debt get much beyond our cash flow. So our debt to cash flow is never going to go much beyond 1.5 times. And we're also going to hedge some of our production, make sure that we have cash flow going forward. So you can see the 3 items that I mentioned: our credit facility of $150 million, our working capital of $75 million, and our cash flow for this year of about $80 million. So that's how we're going to finance our first phase of Onion Lake. The second phase, that's going to cost another $200 million. How we're going to finance that is the increased cash flow, because we'll be producing now 16,000 barrels a day, our increased cash flow, and we'll be able to increase our bank line. So that will give us the financial capacity to finance our second phase of Onion Lake. So once we get both phases of Onion Lake financed and operating, we'll be at about 20,000 barrels a day. And at that point, we can probably tackle Blackrod. First phase is about $800 million at Blackrod. Significant amount of money for a company our size. This is our guidance for the year, and this is what was reduced in our recent press release. We thought we'd be at about 10,000 to 10,500 barrels a day, but because of the delays at Mooney and getting all of our infrastructure built, we pushed that production out to later this year and early next year. So we're going to be producing about 1,000 barrels a day less. Again, the Mooney production is still there, the project's working, it's just that we had a delay in the project. You can see that we're spending capital in all of our projects, but the majority is going to be spent at our Onion Lake project, almost $200 million. We still are going to build some primary wells there also, 20 to 25 wells. One last thing, I don't talk much about John Lake. It's a minor property that we had. This was the property that was in our private company when we joined Pearl. So it was a small property at the time, producing about 50 barrels a day, and has done well. We've developed it. It's producing over 1,000 barrels a day. We're going to drill another 6 or 7 wells. It probably has the potential for 1,500 barrels a day, maybe even as much as 2,000 barrels a day. It's not significant to the company, but 1,000 barrels a day of heavy oil production is still very profitable. At some point, if we go to finance BlackRod, we may sell off something like this. It could generate $60 to $70 million if we sold a property like that. This is a graph of the volatility of oil prices, and especially heavy oil prices. Now, you hear about Brent pricing, it's around $108, $105, $110. It moves around that range, probably plus or minus $5. WTI moves around plus or minus $5, depending. But because of the differential, because of the difference between light oil and what we get for a heavy barrel, our wellhead price in the last 2 years has been as high as $90 and as low as $40. That's quite a variance. And it's because of this differential, it's quite volatile. And what this has to do with is the heavy oil market within Canada, within North America, is a market within a market. So it relies on its own pipelines, its own refineries, its own network to sell its oil. And whereas Brent, it sells in the world market on tankers. So the price of Brent in Asia versus Europe versus some other place is just the cost of transport, it's just the cost of tanker at different places. Whereas with us, if there's a refinery upset or a pipeline upset, this differential can move around quite a bit. And so that's an issue that's very important to us. So pipelines within North America and refineries within North America are important because oil sands production is increasing in Canada along with our production, and we need more pipelines. There's 2 pipelines proposed to the west coast in Canada. There's one pipeline proposed to the east coast of Canada, and there's the Keystone pipeline that they've been working on for 5 years. You may have heard about that. And that one is stalled politically in the United States. Even though most politicians and most people want to do it, it's been stalled at the presidential level. So that's been a problem for us because it causes volatility in the price of heavy oil. How the industry has gotten around that is it's been railing production. So we have about 40% of our production right now on rail cars being transported to the west coast and to the Gulf Coast. So it hasn't replaced Keystone, but it's close to doing that. Right now, I think this year, by the end of the year, we'll have about 400,000 barrels a day on rail cars going to various markets. So we still need the pipelines to be built. It's taken a little longer than I would have hoped, but they will be built. And in the short term, we're railing our production. And we're actually getting very good prices because we're not using condensate to mix with the oil, which is very expensive, because that's a diluent used to transport the oil. And so we're just putting our raw heavy oil in tank cars and selling it directly to the refinery, and it's been quite profitable for us. You can see some of our hedges too. So one of the reasons we hedged our production was because we wanted to make sure that we had enough cash and cash flow to fund all of Onion Lake. We didn't want to get 3/4 of the way there and run out of money. So these hedges, the purpose of these hedges was not to guess that the price would be higher or lower or win on these hedges. The purpose was to guarantee some cash, to guarantee the cash, we'd have the cash to fund Onion Lake. And so that's why we did that. The prices that we've hedged them at were actually historically very good prices. So these hedges give us wellhead prices in the low 60s. So it's in Canadian dollars. So that's those are good hedges that we put in place. Now this is an important slide. What this shows you is the value that we've built over the last 5 years. If you look got going. We had lots of promise. I came up here and I said, I believe BlackRod's going to work. I believe Mooney, the polymer flood should work. But it wasn't recognized. Our independent reserve engineers would not recognize it because we hadn't drilled enough wells. We hadn't built a pilot yet. We didn't know enough about the reservoir. So we weren't getting the value recognized. Now it's being recognized. So this is the value we have in our proven reserves, our proven and probable, and our resource. Now, people might wonder, what does resource mean? What is contingent resource? This contingent resource is going to move into reserves if a few things happen. One is waiting on regulatory approval. So as we move through the regulatory process, we will move that resource into reserves. And some of it is waiting for some more production results, or just waiting to see if the production results are as good as the reserve engineers think. So, but the majority of it is contingent upon just regulatory approval. So we don't have to find more pools, we don't have to invent a new process or try new technology. It's contingent just upon a government process. So we don't think that's significant risk. So this is the value we've created in the company, and this is where our shares are trading. So we think there's significant upside. Why is the market not recognizing that? If it's not going to happen in the next 12 months, they don't want to pay for it. If it's not quite financed, not all of our contingent resource we're able to finance right now, they don't want to pay for it. We found that U.S. investors have not been buying Canadian companies recently. They've been buying shale oil companies in the U.S. So it really has nothing to do with the value that we've been creating in the company, just market sentiment or investor sentiment. So it's frustrating for us. I'm sure it's frustrating for all of you, but we try to focus on the value that's being created versus just the share price. I mentioned earlier in the presentation a lot of the junior oil sands companies that have done poorly. Of the 30 oil sands companies that have been around, 5 did very well. Deer Creek, it sold for about $2 billion. North American Oil Sands, it sold to Statoil for about $2.2 billion. BlackRock, our previous company, it did very well. It sold to Shell. Meg, it's another company that's still around. It's about $6 billion in market cap. It's done very well. And there's a couple of private companies that have done quite well in oil sands. And the rest, the other 20, have done quite poorly. And some are no longer around, and some of them have destroyed a lot of investor wealth. So we try to differentiate ourselves from those other companies that have done poorly. We're a management team that's done this before. We understand the market. We understand how to develop our assets. We have existing production. We have production coming from all of our future potential projects. So we don't just have a map with potential or some seismic lines, or we have actual production, actual tests, actual successful results from our pilots. So that's something that's a lot more solid. So we try to differentiate, because that's the job for Don and I when we go and talk to investors. We want to differentiate ourselves from all these other unsuccessful junior oil sands companies. So this is the last 5 years. You can see production has gone up quite a bit. We've done well. Right here, we're probably staying at 10,000 barrels a day in 2014. And the reason is, most of our cash flow has been going into long-term projects. So here, what we're doing is we're drilling lots of wells at Mooney, lots of wells at Onion Lake, and continue to grow the company. But here, we're investing our cash for the next leg of growth, to go from 10,000 to 16,000 barrels a day. So that'll be right about here in 2015 is where we're going to get to with our first phase of Onion Lake. And 2 years later, we'll get to 20,000 barrels a day. And you can see the growth in reserves. For the next 18 months, what you have to look forward to is approval of the BlackRod commercial development, so regulatory approval at BlackRod, more results from the second pilot well pair at BlackRod, development of future phases of Mooney, and we're building Onion Lake first phase thermal right now. So those are the milestones you'll see over the next 18 months. This concludes my presentation, and I'll be happy to answer any questions that you might have.
finns lite frågor från publiken. Som John sa så var det länge sedan Black Pearl var i Stockholm och presenterade sig, men vi kommer att komma hit mycket oftare nu framöver. Jag vet att en hel del av er redan är aktieägare och hoppas att fler blir det. Jag kom på att jag glömde ju säga vem jag är, men jag tror att ni vet det och jag har träffat de flesta av er tidigare. Men jag heter alltså Robert Eriksson och jobbar med investerarkontakter och mediekontakter för ett antal bolag inom Lundin-sfären. Frågor? Ja, här har vi en fråga.
Yes, can you say anything about the future technical invention regarding 5G techniques? Can you see anything?
The question is about future techniques and future technology and changes.
Yeah.
What's been going on is, I wouldn't say it's major breakthroughs, there have been innovations. So you've seen lots of innovations, like higher temperature pumps. So we've been using pumps that would break down sometimes when you put hot steam in the ground. So some of the innovations that we've been seeing are better completions, so that we can distribute the steam more evenly along the injector. We've seen completions that have a wire-wrapped screen that keeps the sand out but lets the oil in on the producer. A company called Stockholm has invented something called wedge well. It's not really an invention, but they put wells in between other wells to get better recovery. MEG has used gas injection, gas co-injection for steam. So all these innovations are things that we will use. So there's a number of them out there. But our main objective right now is to make sure the process works. So that's what we're doing right now, especially with our SAG project. We're going to employ some of these innovations later. But our main objective is, instead of trying too many things right now, we're going to make sure that the base process works, putting steam in the ground, getting lots of oil out, and then we'll start employing some of these innovations over time. But there is lots happening right now, and we're following that very closely. And so there's other companies like Synovus and MEG and Devon that have been operating now for 10 years, and they're starting to understand these innovations. So although we're not trying a lot of them right now, we're going to employ them later on. And they will, I think, boost our returns or make the project better. But you can't make a bad project better, or you can't make a bad project successful. That doesn't work. Yes, sir.
Can you say something about political risk and opportunities in Canada for Black Pearl?
I will address something that happened recently with Nexen. Was a $15 billion Canadian company that was taken over by a Chinese state-owned enterprise. And when I say state-owned enterprise, it means the government owns all or some of this company. And so that happened 2 years ago, and the government of Canada said, we don't want to have more state-owned enterprises buying oil sands companies. So we sold our last company to Shell. Shell is owned by shareholders like you and I, so it's not a state-owned enterprise. But the government didn't want to see more oil sands companies being bought by Chinese or any other state-owned enterprises. So we can't be bought by a state-owned company, but we can joint venture up to 50% with state-owned enterprises. So that's one of the political restrictions that has been imposed upon us. And it has stifled some investment opportunities. So we've seen a lot of companies not enter Canada or not do as many deals as they have done in the past in Canada. So that's one thing that's happened politically within Canada. Another thing is the issue of the pipelines. There's been lots of delays and problems, and we've had public consultations. So just like any big project that gets done, there's lots of public consultation, lots of public interaction, and it's delayed these projects because there's always people that don't want to see development. There's people that don't want to see fossil fuel development, and especially oil sands development. So we have that issue too, that these projects take longer to get developed. We think in the end they're so important for Canada, they're so important for our economy that they will go ahead, it'll just take longer. Were those the issues that you wanted to address?
Yes, one more.
Yes, that's another issue, environmental political risk. I'll address each of our projects. Onion Lake is on an Indian band. So our Aboriginal or Native band, those are the different words we use for Aboriginals in Canada. It's on their land. They're our partner. They profit from this. We employ their businesses. They work with us. So it is very much encouraged. So the Onion Lake project has no real issues or hurdles because it's being encouraged by the people whose land that we're on, and they profit from it. Mooney is in a remote area. There's some Aboriginal bands nearby. The difficulty there is it's in a very hilly, forested area, so it's difficult to operate. And Mooney can operate during very narrow windows. But we have no real environmental concerns other than consulting with the Aboriginal bands. Our last project, Blackrod, is, there's been some other oil sands projects that have been delayed because they are too shallow. The steam could break through to the surface, so they're too shallow. Or they're near bodies of water, near lakes or rivers, or they're near towns where people live. So we don't have any of those conditions with Blackrod. So we have no environmental issues with Blackrod or any of our other projects. But that is a real worry for some projects that are near people, near lakes, near Aboriginal communities. So that's a real concern for oil sands projects.
Thank you. I think we had one more question over here.
Yes.
Can you elaborate on your statement about the share price has no attributed value to Blackrod and Onion Lake?
Simply, if you look at where our share price is, and if you look at, one way of looking at it is saying that this is the value of our non-core properties, this is the value of Mooney, and this is the value of Onion Lake. So somebody buying a share at this level is paying for that, is paying for Mooney and half of Onion Lake, getting the other half for free, and getting all of Blackrod for free. So it's just one way of looking at what it's worth right now. Or you could say that you're only paying for proved reserves. So it's the same presentation that Lundin Petroleum will give. They'll say, you know, if you buy Lundin Petroleum, you're paying for these parts of our company and getting these other assets for free because the share price does not reflect that value. So that's just one way we try to help people understand what they're paying for and what they're getting for free, so to speak, at the share price level.
Good. Should we have one last question, and then we can have more questions afterwards outside? Okay, one more.
How about wildfires?
We'll just do two more.
Okay, sorry.
We're over here, then we'll get to you. Okay.
I wonder how many of the contingent barrels on Blackrod do you expect to be converted into reserves when the application gets approved?
None. Is that correct, Don? That's correct. So no. So those contingent reserves in Blackrod, this part of the reserves for Blackrod that are in reserves right now, that's in phase 1. This over here is phase 2 and phase 3. So once we make application for phases 2 and 3, we will have it moved into the reserves category. The only thing it's contingent upon is making an application for it. We've made an environmental application for all of Blackrod, and specifically we've made a technical application for phase 1. Once we did that, it moved into reserves. Once we make our technical application for phase 2, it'll move into reserves, and once we make it for phase 3, it'll move into reserves. That's the process.
Tar vi den sista frågan på BlackPearl här borta.
Okay. For a few years ago, it was wildfire problem in Canada. I thought Mooney was in danger. How about this year? How does it look like, and are you insured if something happened to anyone of the fields?
Yes, there was a fire in northern Alberta that came very close to our Mooney project. And actually, it's almost good that we had that fire in the sense that now a lot of that area is burned out. So it's not going to be burned again. It was a ring around Mooney, so that it was all burned away. And I visited the site, and so it should be in less danger. So Mooney's in less danger because we had that original fire. There still is a danger of forest fires in the area. And Don, what kind of insurance do we have if we have a fire that burns down our plant?
Well, our equipment is fully covered.
Do you have business interruption insurance?
We do not have business interruption.
So our equipment would be insured, but we would lose production, or we'd lose that value of having that production come in. So we'd be able to replace the equipment, but we'd lose 6 months of time of production. So that would be a real issue. What we've done is we've burned around. So we've cleared areas around our plants that we shouldn't have a problem with forest fires in the future.
Thank you very much, John. Good presentation. And there will be more time for questions afterwards when we conclude Pradeep's presentation. So with that, I would like